HTX DAO is a top 50 cryptocurrency by market cap, and it's trading like nobody's noticed it exists yet. Here's why that matters right now. Exchange-native tokens have one of the most reliable performance patterns in this entire market. When a major centralized exchange grows, when volume spikes, when user counts climb, when new products launch, the token tied to that exchange tends to front-run the move. We saw BNB go from under $1 to over $700. We saw OKB do a 40x in a single bull cycle. The market has a track record with these things, and HTX DAO is sitting in that exact lane right now, largely ignored, while rank 40 meme coins are getting YouTube thumbnails with rocket emojis. So before the crowd figures out what's actually here, let's talk about what you're looking at. First, a quick note on the name. If you've been in crypto for more than 2 years, you know HTX as Huobi. One of the oldest exchanges in the space, founded in 2013, survived multiple bear markets, regulatory crackdowns, and exchange wars. In 2022, Justin's son, yes, the Tron founder, acquired a significant stake, and the rebrand to HTX followed. That rebrand confused a lot of people and honestly tanked sentiment for a while. But here's what got quietly buried in the noise: the DAO structure that wraps around it. HTX DAO isn't just a loyalty token. It's a governance mechanism that gives holders a vote in how exchange revenue gets allocated, what new products get prioritized, and how the ecosystem evolves. You're not just holding a coupon, you're holding a seat at the table of an exchange that still processes serious volume across Asian and emerging markets. The utility breakdown matters here. HTX token holders get trading fee discounts. They participate in launchpad allocations, meaning early access to new token listings, and they earn a share of exchange revenue through the DAO's distribution model. Sound familiar? That's almost exactly the BNB playbook from 2019. Binance built the most valuable exchange token in existence by making the token genuinely useful to anyone who traded on the platform. HTX is attempting the same architecture, just later in the cycle and at a fraction of the valuation. BNB's market cap right now is sitting north of $80 billion. HTX DAO, we're talking a fraction of that. The compression ratio alone should make you at least curious. If you're finding this useful, subscribe to Crypto Sayans. We break down moves like this before they go mainstream. Now let's talk price. HTX is currently in that zone where retail hasn't shown up, but on-chain data tells a different story. Wallet accumulation at current price levels has been steady, not explosive, but consistent. That's typically how smart money behaves before a narrative shift. They don't announce it. They just buy quietly while everyone else is distracted by whatever coin has a celebrity endorsement that week. For price targets, here's how I'm thinking about it. A return to previous cycle highs, which HTX touched during the Huobi era, represents a significant multiple from current levels. If exchange volume across the board picks up in a 2025 bull run environment, and HTX captures even a portion of the narrative that BNB and OKB own right now, a move into the top 30 by market cap is not a fantasy. That kind of repositioning historically comes with a 3x to 5x price appreciation minimum. A more aggressive bull case, one where Justin Sun's promotional machine kicks into gear and a major product launch lands, could push that further. I'm not throwing out a specific dollar number because anyone who gives you a precise prediction with false confidence is either guessing or selling something. What I will say is that the asymmetry here, downside limited by an existing exchange infrastructure, upside tied to exchange growth, is the kind of setup worth having on your radar. But let's be honest about the risks, because this is not a clean story. The Justin Sun connection cuts both ways. He brings capital, he brings attention, and he absolutely brings controversy. Sun has faced SEC allegations, his projects have had trust issues in the past, and the regulatory environment around his entities is not settled. If something breaks there, a legal action, an exchange withdrawal freeze, a hack, HTX token gets hit hard and fast. That's a real risk. Second risk, exchange token narratives only work when the exchange itself is growing. If HTX loses market share to Binance, OKX, or a rising competitor, the token bleeds regardless of how good the DAO mechanics look on paper. Third, liquidity. This is a top 50 coin, but it's not a top 10 coin. In a risk-off environment, low liquidity assets get sold first and recovered last. If Bitcoin drops 30% tomorrow, HTX DAO doesn't get a hall pass just because it has good fundamentals. Size your position accordingly. So here's my actual verdict. HTX DAO is not a coin you throw your life savings into, but it's also not a coin you ignore if you're building a diversified altcoin portfolio for the next 12 to 18 months. The infrastructure is real, the exchange history is real, the governance utility is real, and the market cap discount relative to comparable exchange tokens is real. The thesis is simple. If the HTX ecosystem grows, the token reflects that growth. If it doesn't, you're holding a governance token for an exchange losing relevance, and that's a slow bleed. The bet is on execution, and right now the setup is there for execution to happen. Watch the volume. Watch the launchpad activity. Watch whether Sun's ecosystem starts channeling serious capital through this platform. Those are your leading indicators before price catches up. Subscribe to Crypto Sayans. We post breakdowns like this every week, so you never miss a move. And hit the bell, because the coins that matter rarely announce themselves twice.